Hey, everybody, Economic Ninja. I hope you guys are doing great. I'm doing great. I have something interesting. We're going to talk about real estate. We're going to talk about some precious metals, but really we're going to focus on real estate today. And we're going to be talking to a CFO. Now, you guys know that I'm the CFO of a couple of my companies. I also run a couple of other companies, but the CFO mindset is completely different than most other mindsets when it comes to thinking about how companies should be run, how money should be handled. And this CFO also is an investor. So without further ado, let's do this. All right, guys. So here we go. We are with Mario Stifano. Mario, how are you doing?
I'm doing great. Thanks for having me on this. This is a pretty exciting interview. I can already tell the energy.
So let me tell you, everybody, I was talking with Mario and we were talking about economics, talking about real estate, the gold and silver industry. And I said, hey, you want to do an interview? And he goes, well, what, like right now? I'm like, yes, right now, no notes. And so this is us just jumping in and start talking about real estate. Mario, you were talking earlier about your real estate investing, and you actually were in California, ran up to Canada, but your real estate holdings are still in the US, right?
That is correct. So when I was CFO of Lakeshore Gold, one of my early passions has always been real estate. And when the US market collapsed with the financial crisis, the real estate market collapsed. In 2011, my brother-in-law lived in Los Angeles, and I traveled down to Southern California and immediately fell in love with San Diego. And I was walking down downtown San Diego. I saw these two black towers. And I said, if I'm going to buy real estate, this is the place to buy it. And I patiently waited until I got the right price, and I picked up the real estate there. I think I got one of the best prices in the building to this date on a square footage perspective. And when I factor in that the Canadian dollar and the US dollar are at par at the time, I just got a steal of a deal. And then I continued to pick up another place in California and some in Arizona.
Man, yeah, to say you nailed it is quite the understatement. So you actually had in San Diego one of those like tower style condominiums or apartments you picked up, right?
Oh yeah, it was one of the first tall towers built in San Diego, right across from the convention center, right near Comic Con. So I just love sitting on my balcony in July. This is all pre-COVID, obviously. But
Yeah.
I said just love sitting on my balcony in July, watching everyone walk by in their costumes and going out for the drinks and the events at Comic Con. I'm a geek at heart, I guess, but
Nice.
there's nothing like being downtown San Diego during Comic Con.
Oh, that is it. I've actually never been to Comic Con, and I actually want to do that really
Oh,
bad. So maybe
you
one
gotta
day we'll
go.
have to meet down there.
Yeah, for sure. You got to go. It's a great event.
Wow.
One of my favorite.
So you said you bought your real estate after the Great Recession. Did you own any real estate before that?
No, just my principal residence.
Okay, but you
I
did have
just
a
saw the
principal
great
residence,
opportunity.
and you
Yeah,
said you'd owned your first home. You bought it around the late '90s, right?
that's correct.
So
Yep,
you've
up
seen a couple of
in
those
Toronto
cycles.
area.
Yeah, you've seen it like two good real estate cycles already come through, two booms.
Oh yeah, I've seen every real estate cycle because I'm the youngest in my family, and I always remember my sister, who's the oldest in the family, when she bought her first home in Toronto. She was telling me this would have been in the '80s, and Canada's gone through real estate cycles just like the US, but probably in some extent more. She was telling me at one point she was paying 18% interest rate for her house in the '80s. That puts it in perspective of what the world was going through in the inflation period. I mean,
Yeah.
we're starting to see some of that inflation now, but we are at 1.5% in Canada for interest rates. So nowhere near 18%, but it gives you an idea of the kind of cycles the world and the economies go through.
I'm glad you brought that up because really, when Paul Volcker spiked rates to that, when mortgages hit that mid 18%, it was as an answer to the inflation crisis that was happening in the mid 70s, late 70s. And I personally tell my subscribers, I view where we are right now we're like 1978. Where inflation's pressing, the Fed is under pressure to do something. They don't want to do anything because of the harm it can do to the economy. And they don't talk about what that spike in rates did to the real estate market, which it actually collapsed the market. It slowed everything down. Well, now, what do you think about where we are now? Near zero interest rates and inflation starting to tick up. What do you think the Fed's going to be able to do?
Well, I personally think the Fed is hamstrung. I mean, we're in a scenario quite different than we were in the '80s, where the Fed, look, it took a lot of, pardon my language, balls to really spike those interest rates and get
Yep.
the inflation under control.
Yeah.
That took a lot of guts from everyone. But today, the problem we have is not only are consumers indebted, governments are at all-time indebtedness.
Yep.
Deficits are going through the roof because of COVID, and we can't really just blame COVID for all these deficits. It's part of that. It was happening. It was really from the financial crisis. The debt went from the consumer to the government, and it never stopped. So we're in a significantly different economic scenario than we were even in the 80s. So if we are in a high inflation scenario, you know, what's the Fed going to do? Increase rates to 6%, which is sort of normalized interest rates, but no one could afford to see their mortgages go from 1.5% to 6% or 8%, because we're going to come up with the money. So we're in a very tough economic scenario that I don't think everyone fully appreciates the box we've been placed in.
No, I completely agree. And really, COVID is the excuse which central banks and governments are now giving for the continual printing of money. Now, when I talked about you in the beginning, I was saying this is a CFO, and technically you're not a CFO, you're a CEO of your current company, which we're going to get to in a sec. But I wanted to, this is hopefully for my subscribers, you're hearing what's coming out of Mario's language right now, because it's a nuts and bolts kind of situation. It's actually very simple. When governments start to spend out of control, inflation rises. When there's fear, inflation also rises, but for a totally different reason. So with that being said, Mario, where do you think, because we talked about the gold price off camera, about how in 1980, we saw that spike to $650, which I believe it actually topped a little higher than that. But right now we're at $1,800 gold. And in comparison, where is that?
Look, I still think we're at the very beginning of this gold cycle. And you're bang on, right? So gold went from around $35 an ounce in the 1970s all the way up to about 650 range in the 1980s. I'm not sure what it peaked at, but it was around that range. And you look at where we are today, you look at the amount of inflation, just look around you. I'll give you a good example. I think I put this on my Twitter feed, but it really shocked me. So I recently moved back to Toronto. I was in San Diego. So in July, I went to I ordered online Uber Eats for my family, a dinner for 6. It's chicken. Don't ask me. I'm Italian, I eat a lot. So for 4 of us, we ordered dinner for 6. It was $80 with Uber Eats delivery, tip, all that. It came out to like $94 if I include the tip. I went again in October for Canadian Thanksgiving. So that's just a few months later. It came out to $125, the exact same thing. There was no difference. So as the impact, Uber went up, the tip obviously goes up with it. Everything. It was the chicken price, right? So I if you go back and look at my Twitter feed, I was saying like, guys, I don't think the real people don't really understand the impact this is going to have on everyone when it comes to inflation. And inflation to me, you know, the 2% inflation is fine. It's manageable. You always want a little bit of inflation. Nobody wants deflationary from an economic perspective. But when you have real inflation, the impact to the family, the middle class, is significant. I mean, just go back into the 1950s. You know, one parent could afford a house, a car, send their kids to college or university, healthcare, all under one income in a blue collar, middle class type job, nothing fancy. You look at today, you have to have both spouses working. You know, you're lucky enough to help your kids go through school. There's no hope in hell a child today, a teen, like my daughter is 19 years old. You know, if she were to come to Toronto, let's say, look, I've lived in the US, obviously, I've lived in Canada, so I know the real estate markets quite well. There is zero chance my daughter today is able to buy a detached home like I did in 1996, which was my first house, a detached home. There's zero chance. When I was at Ernst & Young at the time, I bought it on my income. She can't do it. There's just no way she can do that. Like, I don't even know if she can buy a condo without my assistance. So that to me is quite scary for people to think about, even with 1.5% interest rates. So imagine if it's at 5 or 6%. So real estate may go down. I got no idea. Rent maybe skyrocket. I got no idea what's going to happen. But we're in a really tough scenario because the standard of living with inflation is going to continue to go down. And that is the reality. Yes, we have all these beautiful electronics. I'm talking to you on my phone because my computer battery died.
Yeah.
But hey, this is fresh and free flowing. But so we
Yeah.
have great benefits. Like let's not kid ourselves. We
Yeah.
do live a nice life.
Yes.
But things are getting very tough in terms of trying to support families going forward.
So you said you worked for Ernst & Young. What was your position
Yes.
there?
So actually, I worked for both Ernst & Young and PricewaterhouseCoopers.
Oh,
We're going to a lot of my history here, so I'm always happy to chat about a little bit of my background. But
yeah.
Ernst & Young, I did audit, and then I wanted to do corporate finance, so I moved over to PricewaterhouseCoopers.
Yeah.
So what I did there at PricewaterhouseCoopers after audit, and I did some tax stuff at Ernst & Young as well, but PricewaterhouseCoopers, my big project, which I had 3 really big projects there when I was a manager. The first one was I did a long-term lease of the CN Tower. It's the iconic building in Toronto.
Okay.
At one point it was the tallest tower in the world. So I did that with Canada Lands Corporation, which is a government agency. I restructured the air traffic controller, like NAV Canada.
Okay.
Don't ask me why they wanted accountants to do it, but they wanted us to, figure out if we ever have to seize a plane, what are the rules around seizing a plane, but they wanted accountants. And not just consultants doing it.
Wow, that's interesting.
And then the other one I did is, advised the Ontario government. I got to tell you, huge meetings. It makes you really understand how governments operate. No joke, you go into a meeting, there'd be like 30, 40 people in a meeting to make some simple decisions. But our job there was to implement Service Ontario, which was rather than going to offices and for a driver's license, you go on a kiosk, or now you do it online. So we were the first one to do it in Ontario, and Coopers and Lybrand at the time, which is now PricewaterhouseCoopers, we advised the Ontario government.
Wow, that's awesome. Okay, so everybody, I want you to know, I can't be more honest when I say I literally just met Mario about 15, 20 minutes ago. And I actually put him up to doing this interview at last minute because I say, look, I have a way of pulling things out of people, and I look at things, especially investments, very differently. So now, Mario, you're not a CFO right now. You are actually a CEO of a company, correct?
Yes.
Okay.
Yes, of Galantas Gold.
Galantas Gold. And why I called you is because a buddy of mine, one of the founders of Wall Street Silver, Jim Lewis, which is a huge precious metals investor. He loves the stock side of it. He loves, talking about stocks, the analytics, and all that stuff. And he said something was different about your company, and I need to contact you because I'm big on following the investors, because the main investors do a lot of the work, the grunt work, the research, the studying, get the big picture. And that is a couple of your investors are Eric Sprott and Mike Gentile, correct?
That is correct. And we should put in Ross Beatty in there as well. I mean, these are extraordinary, well-known names in the industry that came in recently into the financing.
Yeah, so that was the first reason why Jim said, hey, you need to contact Mario. You might want to look into this. And I don't own your stock, for full disclosure, everybody knows. Yep. But I want to start identifying companies now while, that gold and silver price is still sort of waning, going up, it's finding its base, it feels like, before everyone starts to figure out what inflation really does to their currency and runs into real money, because I know what's going to happen in the mining sector. But what I really like about this interview that you and I are talking about is your CFO background, the nuts and bolts, the auditing background, because, honestly, there's a lot of companies out there, and it's not even just mining companies, any company on the stock market, dilution is an issue, how we control how much shares go out. It's very important because, and I want people to understand this. Would you agree, Mario, that when a CFO and a CEO are coming together and they're looking at their market cap, they want their stock to go up as well. And so they have to do things special in the market to ensure not only shareholder value, but their value, right?
Exactly. I mean, in order to create shareholder wealth, it's not just about increasing your market cap. You could issue as much paper out there as you want. It doesn't necessarily mean your share price is going to go up, right? Really what you want to try and create is size, through quality acquisitions and or discoveries, whatever your nature of your business is, while at the same time have some share appreciation. No one wants to see a company go from $100 million market cap to $1 billion market cap, but the share price is flat during that period because they just diluted the crap out of their shareholders. So what I think is quite unique about Galantas, and I believe the reason why our shareholders came into this, there's quite a few reasons, but the two primary ones, I believe, number one, I think we've got some of the best geology for a world-class discovery, and I'll explain that to you a little bit later. The other one is we're permitted and ready to go into production. So the difficulty when it comes to exploration, I think you alluded to this a little bit earlier, when you're exploring, you're always issuing paper.
Yep.
Right. Even if you have a discovery, you're at the mercy of your drill bit, and hopefully you've got great geology that you're going to be able to create a lot of value from the drill bit. But at times, the market works against you.
Yep.
Right. The gold price goes down. You can hit, monster hole. But if nobody wants to buy gold or silver or nickel or copper, whatever the commodity is, you could hit the best hole in the world, and sometimes people just don't care.
Yeah.
And your share price goes down because you create a liquidity event for them, and that's the frustrating part when it comes to exploration. You're always at the mercy of the market and your drill bit. So some things you can control, some things you can't. But for Galantas, it's quite different because we're going to be generating some free cash flow. So as we generate excitement around the exploration, my hope is I don't have to issue any more paper, because a lot of effort has been put into this company in the past to get to the position where we can start generating some free cash flow. Yeah. And if we're able to do that, as we get some excitement, we create some value, really the value is going to go in the market cap, and it's going to result in a higher share price, not a higher share count, which is a big difference.
Huge difference. And that's why I wanted to bring it up. And I'm being honest, like I was telling Mario, I don't go by notes. I like to bring out the best or the worst in people, honestly. And I want to talk to them about real nuts and bolts. And that's what a lot of investors aren't thinking about, with any stock, the ability to how you care for that stock and treat it. And in Mario's case, he's dealing with 3 heavy hitter big names in the precious metals investing world. So you've got some people that hold you accountable to all this stuff, right?
Oh, for sure. I mean, I just had a call last week with one of our large shareholders, just wanting an update how things are going, what's the strategy, and just, reassurance that we're still on track with the strategy that we communicated, which we are. Yeah. And the strategy, I think, is really unique in the junior space, because having talked to other people that have continued to buy shares in the market or want to come in and buy shares, there's just not a lot of companies out there that I think have the ability to have large, high-grade discovery and produce cash flow. And that's what I think is quite unique. So if you look at Galantas Gold, we're in Northern Ireland, so beautiful Irish gold. Hopefully you got the luck of the leprechauns or the Irish around us as well. And but just as importantly, geology is key. So 20 miles away from us is a company called Dalridian, and they had a 6 million ounce discovery. They got bought out in 2018 by Orion. It's a very large New York-based private equity firm. And they got bought out 550 million Canadian in a much lower gold price environment. So I don't know what they're worth now, but I even know they have more gold when they were bought out. So, we're right next door to a world-class discovery, same kind of geology, great grades. We just drilled, we issued a news release last week of almost 27 grams over 2.9 meters, plus some lead, plus some silver. So we got some very high grades, some good widths. But the difference here is we haven't really drilled our deposit because the focus was trying to generate cash flow. And for the first time now, we're capitalized when we raised $8 million with those significant shareholders. And now we're positioning ourselves to try and generate some cash flow early into 2022.
Well, let's do this. I'm glad you brought that up, because I'm going to put a link, guys, below to any information that Mario wants me to get to you guys. If you want to get some more information on Galantas Gold, I'm already starting to fumble over my tongue.
Hey, we both do that.
Yeah, holy cow. I'm going to put that in the comment section and pin that below. And with that being said, is there anything else you want to close on, Mario?
No, I think we covered off a lot of stuff. I'd love to do this again because you brought out a lot of my history here, and it sort of makes me, holy crap, the stuff I've gone through in the cycles as either a CFO or a CEO. One story, maybe we save for the next one, but where I was CFO of Ivernia, was a lead mine in Western Australia, and we were shut down, and overnight, basically, I had to buy back $20 million of a short because I pre-sold my lead concentrate. And sort of reminds me a little bit about how quickly the markets move. Maybe that's why I'm bringing this up. So we represented 3% of the lead market in the world.
Wait a minute, you're giving away the whole story right now. That's like the
no, I know, but this is a great one because it's going right into it. It just makes me remind it. how quickly things change on a dime for people.
Yes.
So I convinced my CEO at the time, and I said, Alan, we have to buy back our short. I lost $3 million buying back my short position.
Wow.
Which is quite significant. We had about maybe then $150 million market cap.
Yeah.
I got to tell you, because we were the largest, single largest pure lead play out there, lead went from around $1,600 a ton to $4,000 a ton. So we would have lost almost over $40 million in a short. Would have put us under bankruptcy because we couldn't ship lead, couldn't generate revenue, right? So markets move extraordinarily fast. So as you were sort of linking, pay attention to all these various companies. Right? I think Galantas Silver is a great company. I'm involved with other companies as well. I think they're all great companies. I'm very particular with what I'm involved with.
Yeah.
And if I don't like it, for whatever reason, time to move on. And I've done that in the past. But it reminds me that if you think, and I believe gold and precious metal are going to go way higher than we are now, and when it starts to move, it doesn't move 1%, a month or 1% a week. It could move 3, 4, 5, 10% a day at times, and I've seen that happen.
Oh yeah.
So you got to move pretty quick if you have conviction of where the world's going and where precious metals are going. You got to move quick. When I bought real estate, right? I mean, thank God I bought it when I did, because the market wasn't down for real estate for too long.
Yes.
When I bought in California, things moved pretty quickly.
I completely agree. Well, man, thank you so much, Mario, for jumping on this call. I hope this experiment went well. And guys, if you want to hear any more about that lead short situation, put it in the comments below. Any questions you have too, Mario will be taking a look at those comments too, because it really gets us the right information we need to bring you guys the information you desire to make the best decisions. So thank you so much, Mario, for jumping on.
Oh, I really appreciate it. I mean, this was great. This is one of my best interviews. I enjoyed it a lot.
Right on. Well, with that being said, guys, the Economic Ninja is out.